Welcome to the Lone Ranger Radio Show. My name is Bruce Woodburn. I'm with CrossCountry Mortgage, and I am the Lone Ranger. You know, I've been helping families purchase and refinance homes for 32 years. I've been in the same location here at I-4 in Fairbanks, right at 2729 West Fairbanks Avenue for over 20 years. What a great location. And I'm here to help families throughout Central Florida, throughout the state of Florida. Matter of fact, we've got branches in all 50 states. I can help you if you're buying here in Florida or anywhere else in the United States for that matter. I love helping people become homeowners. I love helping people save money. You know, I was a 10th grade dropout, lost both my folks when I was 15 and 16 years old. And fortunate enough, I never made it to jail. Okay. I probably could have come close, made some bad decisions, but you know, my parents were great folks. My dad was a builder and my mom was a housewife. My dad built lots of homes here in Maitland and in Orlando back in the late 60s and 70s. Unfortunately, they passed, but they had really good friends that gave me a lot of good advice after they passed because, you know, I quit school in the middle of the 10th grade and strayed a little bit, did some things I probably shouldn't have done. But you know what? They came around and helped guide me in the right direction, and I met some amazing people that cared and loved me and cared enough about me to help me get on the straight and narrow and get things going in the right direction. And that's when I was introduced to the mortgage business. It helped me understand how valuable my credit was and how to fix credit. Because, you know, back in those days, I mean, when you're a young adult, you don't think credit's all that important. You know, you don't care about anything back then. You know, you don't care. You think you're invincible. And I didn't think credit was all that important, but boy, do I now. Boy, do I now. So if you are a young adult or if you're a mature adult and you want help on getting your credit fixed, don't fix it yourself. I'm going to tell you this, you'll do more damage than you will good. Whenever I hear somebody say, I don't want to apply yet, Bruce, because I'm trying to fix my credit. Don't fix your credit. You're going to screw it up even worse. And listen to me, don't hire a credit repair company unless you talk to me first. Do not hire a credit repair company unless you talk to me first. I see so many people out there that hire these companies. Some of them are national companies. And you know what they do? They dispute all of your items on your credit report that are negative. Oh, you know what that does? Makes you feel really good about yourself. Because, wow, my credit score went from 550 to 625. That's great. Now you still can't buy anything because you got disputes all over your credit report. You can't get a mortgage with disputes. Let me explain. Okay, Freddie Mac, Fannie Mae, Ginnie Mae, which governs all government type loans, had discovered that when people started disputing loans, that the credit bureaus eliminated the derogatory account that was disputed from the credit scoring model. So if all of the bad things in your life were taken out, you'd look pretty darn good. But they were just covered up by a mask. They were still there. So Fannie, Freddie, and HUD said, you know what? We don't like it because the credit score that's being depicted is not truly the correct results of what your credit really is. So then they came back and they said, no disputes. Can't have any disputes or no disputes over $1,000 cumulatively, or you can't get a mortgage. So then you go back and you go, oh, now I got to remove my disputes. What a pain in the butt that's going to be. Yes, it's a pain in the butt to remove disputes, but you can't get a mortgage with disputes. Some of you don't even know you have disputes because you called up the company and went, I don't agree with this bill. But you didn't say the words dispute. Well, guess what they did? They marked it dispute. And now you can't get a mortgage because you got a dispute. And you didn't even know it. So we got to remove disputes. What happens once the disputes are removed? Your credit score goes right back down to where it was. So we have to fix them properly. Why don't I like most credit repair companies? I think they stink. You call me. Here's my phone number. Write this phone number down. Stop the F-150. Pull over in your Prius. Stop your car right away. Make sure you look in your rearview mirror first. Don't cut off traffic. Write this number down. 407-706-5600. 3313. 407-706-3313. Watch me listen to me on my Spotify podcast. Listen to me on my iHeartRadio podcast. Watch me if you want to watch this show live or recorded. Go to my YouTube channel at thelonerranger.radio.com, lonerrangerradio.com, or look up Bruce Woodburn YouTube channel. You can see me there. On a couple of different radio stations broadcasting throughout Central Florida. I discovered something that if you're not getting great reception, most of these AM channels are also broadcast on FM, but in HD. And if you've got a car or a vehicle that's after like 2016, you can search for HD channels. And man, I heard my show all the way up to St. Augustine, where on the AM channel, I was hardly getting it past the bridge there at Lake Monroe. So you want to get a better reception? Tune in to the FM HD2 channel. HD2 channel. Get you greater reception. Sorry, I digress. See, that's what happens. ADD, big time ADD. I can't keep track of anything anymore. I have to write things down. Everything in my life is super simple, including the way I get you approved. Let me go back to where we were talking about. I don't like credit repair companies, most of them. I use 3 credit repair companies when your credit is really in the toilet. So if you got really, really crappy credit, that's right, it's in the toilet. I can help you, but don't do it yourself. I'll hook you up with one of my favorite credit repair companies. Why? Because most credit repair companies are going to take your money, they're going to dispute your items, and you're not going to get results. I want companies that are going to get results because, listen, I'm in the business of getting you a mortgage. You want to buy a home. You want to refinance a home. Your credit is getting in your way. We got to fix it. Now, listen, if you got a couple of minor little dings on your credit, maybe some debts to pay off, a couple of collections, maybe I can guide you in the right direction. My team is experts at that. But if it's really bad, I'm going to get you into my credit repair program. Now, listen, when I say my credit repair program, I don't own the companies. I don't get paid by them. But what they do is they keep me informed as to your progress and when you're eligible for financing. That's what you want to do. 407-706-3313. 407-706-3313. I'm the Loner Ranger. You can apply online at WeBringYouHome.com. Easy to apply online on my website. You talk about push button, get mortgage. It doesn't get any easier than this. Not only do you go to WeBringYouHome.com, okay, you hit apply now. You'll see my picture there. Hit apply now. You start the application process. When you're finished, okay, you make sure it's completed. When you're finished, it'll send you the checklist on documents to supply. And then so you can you create your little login with your own little password, and then you can securely start dropping all your documents, your pay stubs, your bank statements. Matter of fact, if you put your bank account information in the application, which you should do because I'm a secure mortgage company, it will oftentimes pull your bank statements right from your bank account. Doesn't get any easier than this, you guys. It'll oftentimes, if you work for some companies, it'll even verify your employment without you even doing anything. You just put in the proper information where you work, and it'll oftentimes download it. If not, we're going to verify it for you. 407-706-3313. I'm the Loner Ranger. My job is to help you save money if you're going to refinance, save money if you want to purchase, how to purchase, how to become a first-time home buyer, how to buy that investment property, how to buy that vacation home on the beach. It's time. Man, listen, we talked, and I'm going to bring on in the next segment, I'm going to bring on my son, Chase Woodburn, first-time home buyer, bought his first home at 22 years old, started his first job. And listen, he didn't get any help from Mama and I. And he's going to walk you through the process on how you too can become a homeowner and how you can help your adult children become homeowners. Let's stop the madness of renting. There's no such thing as a rich renter. Stay tuned. We're going to be right back with the Loner Ranger Radio Show in 5 minutes. Welcome back to the Loner Ranger Radio Show. My name is Bruce Woodburn. I am the Loner Ranger. We talked about in the last segment how to save money, how to get a first-time home buyer into the market, and my commitment to making sure that I'm helping more young people. And we talked also a little bit about what's going on with Gen X and millennials right now, and they're way behind the previous generation, and that's not good. Most of it, if you look through history, most generations have done better than the generation previous to them, but not Gen X and not the millennials. And so in 2016. They did a survey through the Federal Reserve of St. Louis and found that white millennials were way behind, and black millennials were even further behind. Matter of fact, they were behind by about $28,000 from the previous generation. Now they went ahead and looked forward on that and determined that up to 2019. They had made a huge recovery. As a matter of fact, they had almost caught up to being even, but not quite. So white millennials were down by 5% from their previous generation as of 2019. Here's the unfortunate thing, guys. Black millennials, same generation, down 52% from the previous generation. That's horrible. It's horrible to know that there's more people in government, more minorities in government, and yet the black generation for today is doing far worse than the previous generation. I'm committed to helping you. If you're a minority, you call me at 407-706-3313. I'll get you on the straight and narrow. I'll get you on the straight and narrow. You don't have to be a minority. I don't care who you are. You could be black, Hispanic, white. Doesn't matter. I'm here to help you. And I want to tell you, I'm going to bring on the air right now my son, Chase Woodburn, who is an inspiration to all young people. I'm going to tell you, I'm super proud of him and the journey he went through to become a homeowner. So, Chase, welcome onto the show.
Thank you for having me.
You're very welcome. Very welcome. So, I know we've talked about this in a previous show, but I want to kind of go back and recoup. You graduated from UCF when?
May 2020. So a year ago next month.
A year ago next month. And you decided you wanted to become a homeowner because you said you had saw me teaching my wealth building classes and how to accumulate wealth that way.
Yeah. So I saw that, and I saw, how the money that you're putting into rent is really going nowhere for you. It's not helping you out at all. You're not leveraging any sort of equity or anything. And I wanted to make sure I broke that cycle of being a tenant as soon as possible.
So you had, when you graduated, even before you graduated, you went from a dorm type thing into renting a home with a couple of roommates.
Yeah. So I had 3 friends that I was renting out a house with. We were paying, it was in a decent area, but we were paying around $2,000 a month between 4 of us.
Okay. So $500 a month.
Yeah,
apiece.
about $500 a month per person. Yeah,
per
exactly.
person. And then you didn't mean to do this, but you accidentally did something pretty darn smart. Nobody even knew it at the time.
Yeah. So this was a really interesting turn of events that we had. So I necessarily didn't qualify for the price range I was looking at.
When you were looking to buy a home.
When I was looking to buy a home.
But let's talk about the rent and how you collected rent, because it turns out it will segue into how that benefited you.
Right. So me being concerned about making sure that everything was paid on time, we were all on the straight and narrow with everything, I took it upon myself to collect the rent and pay my landlord.
Okay. So all of your roommates then paid you the rent, and then you paid the landlord.
Correct. Yeah.
Okay. So you did that to make sure that the rent was paid and your credit was good.
Right.
Which was smart. But you didn't know what it was going to do when it came time to buying a home.
Right.
So you got out of school, you graduated from college right in the middle of COVID.
Yeah.
Right?
I had my graduation ceremony on YouTube. So.
On YouTube, right. So, I mean, believe me, that's a different story. But you graduated from college. We celebrated in the house on YouTube. I remember that.
Yep.
And you had already started working, like you started working part-time here at the mortgage company doing marketing and things like that, while you decided you wanted to get your mortgage license.
Yeah.
So you were an entry-level employee. I know, I don't want you people out there thinking that he came to work with me and he was making a bunch of money. You were an entry-level employee, and you're still one of the beginners, because you're finishing up an amazing part of your training here, but it's not like you're making $100,000
Right.
here.
Yeah, exactly.
Okay. So you had discovered that you had to research what loan programs would meet your needs best.
Correct. Yeah. So the loan programs that stuck out to me immediately was the first thing everyone really thinks about is FHA.
Right.
So you're getting your 3.5% down. You're financing in your upfront mortgage insurance. They're pretty lenient when it comes to your debt to income ratio and your credit history. All that was immediately appealing to me, as it is for most people. The one thing I didn't like about it was that the PMI is not, it's not relative to your credit score or anything. You pay a flat mortgage insurance rate. Right.
But it allows folks that may not have great credit to get into a home.
Exactly.
But you had pretty good credit because you had established some credit cards while you were in college, and kept them low so that your credit scores were high.
Right. So I think I had a 760 credit when it all.
That's a 22-year-old kid with a 760 credit.
So I made sure my credit usage was below my 30%. I was ticking off all the boxes. You want to make sure that you have consistent usage, you're paying your bills on time, you are keeping your usage, relatively speaking, low, but still active. And I did all that, and I only had, 4 years of credit history, but, I started when I was 18, and by the time I was 22, I was set.
Yeah, so that's great. So then you looked at FHA.
I looked at FHA. I liked what was there on the surface, but I thought that there may be something better, especially because of my credit score. I thought that conventional may have been better if I had to shell out the extra, 1.5%.
Okay. So how much can you put down on a first-time homebuyer program conventional?
That's a great question. So the program that I found that I really liked was, it's called Fannie Mae Home Ready. And that is actually a 3% down conventional program.
So I want to just plant this in, because if you're listening to the show right now, I've got Chase Woodburn on with us. He is 23 years old, bought his first home at 22. If you want to know more about these programs, I want you to go to my website at WeBringYouHome.com. That's WeBringYouHome.com, or call the office or call the station at 407-706-3313. That's 407-706-3313. All right, so you discovered that a conventional loan was probably better suited for you because you had the credit score.
Right.
But it's more limited on debt ratio too.
Exactly. So you have really 5% less leniency when it comes to your debt to income ratio, right?
Okay. So not as flexible.
Not as flexible. But there are some more avenues for income that you can use on the Fannie Mae program.
Tell us about that.
So this comes back to me collecting the rent for my other roommates.
Okay.
So what I was able to do is I was planning on bringing a roommate with me. I mean, I'm still only 23 years old, and I wanted to save a little bit more money, so I wanted to have someone else in the house with me. So I brought one of my roommates over that I had previously had that was paying me the rent, and I was able to use what's called border income.
How long did you have to verify that border income?
You have to have 12 months
worth of border income proved in the past.
Right. So
in your bank account.
Exactly. So that's going to be, I did that over Venmo, so I could see my Venmo transactions on a monthly basis.
Okay. So, I want to talk more about this. This is really interesting stuff. So, we're going to take a break. We'll be back in 5 minutes. You can go to my website at WeBringYouHome.com. That's WeBringYouHome.com. Or you can call me at 407-706-3313. That's the Loan Arranger at 407-706-3313. And by the way, Chase is now a licensed loan officer, been through the program, and he's going to walk you through the program for all you young adults. Stay tuned. We'll be back in 5 minutes. Welcome back to the Loner Ranger Radio Show. My name is Bruce Woodburn. I am the Loner Ranger. Been in the mortgage business for 32 years. I've helped more than 9,000 families save money by purchasing or refinancing real estate. And I'm still going strong, my friends. I'm here to help you save money, here to help you understand the mortgage process. How can you get in the market? And right now we're talking to Chase Woodburn, my son, who became a homeowner. We talked in the last segment about how he started his journey, getting out of college, making sure his credit was in good shape, researching loan programs that were best suited for his needs, discovered that there were options for FHA and conventional loans, and how he was able to use border income to help him qualify. So, Chase, welcome back on the show.
Thank you for having me.
You're very welcome. So, I just kind of recapped from the last segment. So, you were able to use border income. Now, why did you use border income?
I used border income because my income on its own was not quite enough for the price range I was looking at.
So, the income that you were making with your job didn't qualify you for the amount of house that you really wanted or needed to buy.
Correct. Exactly.
So you were, that was either mom and dad co-signing or you finding another avenue.
Exactly.
And was mom and dad willing to co-sign?
No.
No, they weren't. I don't co-sign. All right. So, and again, I also didn't buy him his first car. I make my kids buy their own car. That's the type of dad I am. I think that, but look at this kid is so responsible and loves his house. He becomes a gardener now. Like, he tells me about gardening and painting his house. I mean, this is pride of ownership.
Exactly.
So you used border income because you didn't qualify, but you accidentally did it right. So who's ever listening to this now that wants to become a homeowner and maybe a little short of income knows that if they have roommates, then they should be the one collecting all the rents and paying the landlord directly.
Right. That's the big thing. Make sure that you are taking the initiative, pay your landlord on time, and pay your landlord yourself.
Right. So you collected all three other tenants' rent, and you had to accumulate that, and you had to prove that when you got the mortgage that you had done it for at least 12 months, and you averaged that.
Correct.
Then you could take the new house that you wanted to buy, and you weren't going to have three roommates. You were only going to have, what, two or one?
Just one.
Just one. So you took that, say, $500 a month that he was paying you, and you could use that to offset your debt ratio that allowed you to get into the house that you wanted to buy.
Right. So, and a lot of people my age, you're not starting a family yet. So, maybe having a roommate's a good idea anyway. Offset the payment. What I do is I take my roommate's payment and I put it towards the mortgage on top of that. So I'm putting an extra $450 towards my principal balance every month.
Well, that's pretty impressive because you are following my Leapfrog program on how you can amass wealth. Now, I like that. I like that a lot. And I never want you, when you're renting property, to scrape your rents off for your own personal use. It always goes toward your next purchase. Now, you've owned a home. You've had it now for almost a year.
Almost a year.
You bought it for $245.
Correct.
You got the seller to pitch in a little bit in closing costs for you.
Yeah.
Okay. You got a minimal down payment program with a reduced interest rate and reduced mortgage insurance.
Correct.
Okay. Now we're a year from now, and you now looked at what your value of your home is worth right now. So you paid $245. What's it worth right now?
About $280.
It's worth about $280. So we've got about $35,000 in equity, and it's not even quite a year later.
Not even a year.
Not even a year later.
I bought it in June. So.
Okay. So first of all, are you recommending to young people to follow those footsteps?
I enthusiastically recommend it, right?
So now here's the thing. Chase is now a fully licensed loan officer. You've been on my team for a year. You've gotten all the training and screaming at from dad to make sure you do it right,
Yep.
right? So are you pretty confident that you are proficient in helping somebody get through this process?
Oh, definitely. I've helped multiple people already use the exact same program that I did, and they all love it.
Right. So here's somebody that not only talks the talk, but walk the walk. So if you are a first-time home buyer, if you are a parent with a young adult, if you are a grandparent with young adults, then let's help them in. Look, you can call Chase directly at the office, okay? You can call, first of all, you can always call my cell phone at 407-706-3313, 407-706-3313, or WeBringYouHome.com. Or if you want to reach Chase at the office, call the office at 407-869-8830. That's 407-869-8830. Ask for Chase. Chase will help you. He'll walk you through the program. And like he said, he's enthusiastic about it, right? Because he did it. He accomplished that goal. 407-706-3313, 407-706-3313, or WeBringYouHome.com. So, okay, now we graduated from college. We researched the programs. We saved the money. You bought the home. You used the border income. You're now profiting about $400 a month over and above your mortgage payment. You're putting that towards your mortgage payment. You got $35,000 in less than a year in equity already built in. If that doesn't encourage young people to buy a home, I don't know what would.
Well, here's something else that's important. My mortgage payment's about $1,300.
Okay.
Name one place where you can rent a 3-bedroom for $1,300 in Orlando.
Yeah,
you can't do it.
It'd be pretty hard to do. Matter of fact, it'd be extremely hard to do. But let's just say that regardless of that, look at the amount, like in your job.
Right.
Okay. And we don't have to tell anybody how little Dad's paying you right now. Okay. But in your job, were you able to save $35,000?
No.
Not even close. Not even close. It practically doubled your annual income.
Yeah.
It practically doubled your annual income. All right. So I put that in perspective because this is not smoke and mirrors, you guys. This is the real deal right here. And I'm proud of him for following those footsteps. But now, what's the next step for you?
The next step for me is I'm saving up again. I love the house I'm in. You said not to love it too much, but I do love the house. I'm saving up. My next plan is that I'm going to buy another house in a couple of years here. Maybe move out away from the UCF area, and get some more wealth under my belt and pay off this house. So, well, let's just follow that step. So let's just say it may be 2 years, it may be a year. It may be the end of this year. You don't know what, but your desire is to purchase another home. Exactly.
And then what are you going to do with the house you have? You're going to sell it?
I'm going to rent it.
You're going to rent it. So you're already profiting $400. What do you think you could get for rent on that house?
Oh, easy. I could probably get $1,600 rent.
Okay, so you can get $1,600. Your payment's $1,300. Right. So you got $400 in rent. Now, what would you do with that $400 profit?
I'm putting it right towards the principal.
So you're putting that toward the principal, and then you're going to buy another house, and you're going to live. What are you going to do with that house?
I'm going to live in it for a couple more years, then do the same thing, rent it out.
Okay, so why do you do that rather than waiting for 5 years to save 20% down on a $300,000 house?
Rent increases faster than anything else I could do with
then you could save the money.
Exactly.
So you'll never be able to save 20% to do an investment property, or it'd be tough to do, but it's easy to save another 3 or 5%. Now, I think, if I'm not mistaken, under this program, your next property, you need to put 5%.
I need to put the 5. So,
or you could do an FHA loan for 3.5.
I could, because it's going to be my primary residence the whole way down.
So you're only going to buy primary, keep it for a year to 3 years, rent it, do it again, do it again, do it again, do it again.
Ad nauseum. Yep.
Ad nauseum. So what we're going to do is we're going to accumulate that wealth over a long period of time, and you're going to then live off. And how long will it take you to have all, like, say, 5 houses paid off?
I'd like to do it in 15 years.
You'll do it in 17 years. That's how long it's going to take. We'll be back with more of the Loner Ranger Show with Bruce Woodburn, CrossCountry Mortgage. Go to WeBringYouHome.com. That's WeBringYouHome.com, or 407-706-3313. If you have questions for Chase Woodburn, he's the first-time home buyer. He knows the programs inside and out. We'll be back in 5 minutes. Welcome back to the Loner Ranger Radio Show. My name is Bruce Woodburn. I am the Loner Ranger, CrossCountry Mortgage here in Winter Park, Florida. Same location, 20 years. Been in the business for 32 years. Helped well over 9,000 folks become homeowners and refinance and save money. And my show's all about how you can refinance or save money when you're buying real estate, how to become a first-time home buyer, how to do a move-up program. By the way, if you're a nurse or you're a healthcare worker or you're a first responder, you're a veteran or you're a teacher, I got great programs for you. Great program. Save you thousands of dollars by purchasing a home or refinancing a home. You call me at 407-706-3313. That's 407-706-3313. And I'll help you, guide you through the process and save you a lot of money. I am the official lender for the Fraternal Order of Police. I'm the official lender for the Police Benevolent Association. I am the official lender for several of the teacher unions. I'm committed to helping you. Help a lot of folks at Advent Health. I got a special program for them. I got a special program for folks that work at Orlando Health. And listen, I had a call the other day. They said, "Hey, I work at Orlando Health, but I'm not really healthcare. I do something other than healthcare. Do I qualify?" Yes, you qualify. Yes, I don't care if you're the custodian. The surgeon couldn't do the surgery if they didn't have a custodian to keep things clean. You qualify for that program. It's available for all people in the healthcare industry and all the people in the educational industry, all the people in law enforcement or first responder industry. It's available. With me today, I have Chase Woodburn. Chase has been on the last two segments with us talking about his journey as a first-time home buyer, bought his first house in his 20s. Okay, is super stoked about the process on how to help other young adults become homeowners, why he is committed to helping young adults become homeowners, and he's sharing his journey. So we just got through talking about how he became a first-time home buyer, what he did to get there, and that he's now saving for his second home, and his aspirations are to have multiple properties over a period of his lifetime. And we calculated based on my home buyer analysis that if you buy a home in your 20s and you buy a home every 3 years and you raise the rent 3% every year, and we use a 3% appreciation, that over a 20-year period of time, you could easily amass 5 properties free and clear worth over $2 million, paying you $15,000 a month in rent.
Right.
Okay. And there's no telling whether you're going to stop there or not. Okay. Yeah. But I keep it simple when I teach this program, Chase, because not everybody wants to be a property management person, and you don't have to be with 5 properties, but you could hire somebody to manage them if you didn't want to. Right. Right.
Exactly.
So you are now saving for house number 2, but you were telling me during the break that about a couple of clients that you're working with. One is like a very wealthy client that has millions of dollars in the bank, makes a lot of money, putting a lot of money down, buying, maybe a $700,000 house. And then you said, "Oh, we just went into contract on another client." Won't mention any names, but how were you introduced to this client?
So I got introduced to this client. I was doing a first-time homebuyer class, as fate would have it, with a gentleman realtor named Dan Pokema. We did it at a venue. It's called Three Masks. It's a African cultural store. And these clients came to me after the show and they said, "Hey, Chase, we're looking to buy a house. We don't have enough money to do a 5% down. We want to do all these things, but, we want to stabilize our monthly payment. We want to make sure it's not going up. We want to start getting some equity under our belt. And we want to get a house that we can raise our kids in."
Okay. So what's happened? So how long ago was that?
So that was beginning of the year. All right. Okay. So they have been working with me since January, and we finally went under contract. As you know, the market right now is absolutely crazy. But what I was super excited about was on these conventional home-ready programs, the rates are so favorable that we're actually seeing rate rebates right now on these.
What do you mean by that?
So the rates exist on a matrix of whether you are putting money towards the rate to reduce your monthly payment or you can get a rebate back in what's called a lender credit to stipend some of your closing costs.
Okay. So right now, because it's such a competitive market, it's hard to get a seller to pay closing costs.
Exactly.
So you're saying that you could bump the interest rate up slightly,
right,
if desired, but give them money, give them a credit back from us.
Right, exactly. So I was able to get them $1,500.
No kidding.
And it only cost them, $30 a month.
Extra in a payment.
Extra payment. And I did the numbers on that. And I was like, shoot, if you're in this house 5 years, that's what we call a break-even point. It would be your 5 years.
Wow.
You're going to be renting it out by then anyway.
Likely.
But
even if they don't, how much are they paying for this house?
They are paying $217,000.
Okay, $217,000. Okay, and if that house increased only by 7% per year,
right?
Okay, which we're seeing like 16 to 23%.
It's crazy.
7%. That means that it increased by $15,000 a year times 5 years. So in 5 years, their house should be worth $75,000 more.
Right.
But even if it only increased by 3%, it'd be worth $35,000 more.
Exactly.
So for $30 a month, they're going to make $35,000.
Exactly.
Or $75,000. And it would even be $140,000 if we just continued at the pace we're going. But we can't assume that that's going to, we're not going to stay at this appreciation pace forever.
Right.
But we don't expect houses to go down because we're experiencing inflation. Cost of goods are going up. Interest rates are probably going to go up along with it. A shortage of inventory always drives the market up. Right. So what could you tell our young folks listening to this now, or maybe adult parents with young people like me, because a lot of my listeners are my age, or even grandparents of young folks your age? What encouragement, what advice could you give them to help them, encourage them to help their siblings or their children or grandchildren become homeowners?
Here's the hard truth of the industry. When we see appreciation like this, it means that you want to get in the game as soon as possible, right? There's no two ways around that. When you're seeing appreciation like we are right now, a house that may be perfect for you right now may be not obtainable for you in the next year, and your rent's going to go up anyway, right? Everything's going up. The fastest way to be able to stabilize your monthly expenses is to buy a house as soon as possible.
Well, so what do you say to people say, oh, it's getting too expensive right now?
It's only going to get more expensive.
It's only going to get more expensive. And you're right, because your rent's going to go up with it. Actually, rents are going up as fast as houses are appreciating. So you might as well get in the game of homeownership.
Exactly.
And you bought a home less than a year ago, and you've already increased in value by about $35,000.
Correct.
It makes no sense to be a renter.
To keep renting.
There's no such thing as a rich renter.
Nope.
They don't exist. You find me a person that's a renter, that's rich, I don't think you're going to do it. I've never seen one. The wealth in this country is built in real estate because, look, the chances on me being a famous country singer are probably not that good.
No. I've
what
heard
do you
sing.
mean? I'm not that bad, okay? I'm not likely going to be a movie star, and my aspiration was to be a famous race car driver, and that really hasn't panned out for me, although I'm still pretty good.
Pretty fast.
I'm pretty fast.
We've done that NASCAR experience.
I have done many times. So, but the fact of the matter is that the way to build wealth in this country is easy. You just got to get in the real estate game.
Correct.
You got any questions for me? I'm the Loner Ranger. You want to talk to Chase Woodburn directly? Call him at 407-869-8830 or connect with me at WeBringYouHome.com. That's WeBringYouHome.com. I want to thank Chase for coming on the show. He's an inspiration to all young people, and I encourage you to stop renting, get in the market, call Chase. He's enthusiastic about the program. He will get you home. WeBringYouHome.com. That's WeBringYouHome.com. We'll see you next week. Same time, same place.